What happens when a company that's basically synonymous with cigarettes for, well, over a century announces a future without them?
Yeah, it's a pretty fundamental question, isn't it?
Totally. Today, we're taking a deep dive into exactly that, the fascinating, really complex transformation of a global industry giant.
We're focusing on Philip Morris International, PMI, and we're digging into their latest 10K filing. That's the big annual report for the year ending December 31st, 2024.
Right. And this isn't just about the numbers, though we'll touch on those. It's really a blueprint for a massive strategic pivot.
Epic proportions, really, how a company this size tries to reinvent its whole identity.
Exactly. So our mission today is to unpack the most important bits from this very detailed document, give you a shortcut to understanding PMI's bold new direction.
And the innovations driving it, plus, the pretty significant hurdles they're facing.
Yeah, there are definitely hurdles. Get ready for some surprising facts, maybe some aha moments.
So, the big picture first. What really jumps out from this filing is just how fundamentally PMI is trying to shift its core identity.
They actually state it, don't they? Something about a smoke-free future.
Right there. Their goal is actively delivering a smoke-free future, and the ultimate ambition, completely ending the sale of cigarettes.
Wow, that's a big statement for PMI.
It is. And it's not just talk, like you said. It's backed by some serious long-term investment.
Okay, let's unpack that investment because the number is kind of staggering. Since 2008, they've put over $14 billion into this.
$14 billion, yeah.
Yeah.
Developing, scientifically checking out, and then commercializing these smoke-free products, or SFPs as they call them.
That's not just, R&D budget. That's a massive bet on a whole new future.
It really signals they believe their future depends on leaving traditional cigarettes behind. And they've built up like world-class scientific teams to back up their claims.
And it goes even further, right? It's not just about nicotine anymore.
That's another really interesting layer. Since 2021, they've actually ventured beyond nicotine in wellness and healthcare.
Wellness and healthcare. From PMI.
I know it sounds like a stretch, but their focus areas are things like oral and inhaled consumer health products, and even inhaled prescription stuff for pain management, cardiovascular emergencies.
Prescription products.
Yeah.
Yeah.
They're even looking into medical cannabinoids, non-recreational CBD, though the filing is quick to note that any revenue from cannabinoids is going to be negligible in the near to medium term.
Still, that feels like a huge leap. I mean, how does a company with their history even start in healthcare?
Well, it definitely raises eyebrows, and it speaks to their long-term vision, maybe diversification, a hedge against declining cigarette sales.
Makes sense.
It's a tough space for them, no doubt, but they're clearly exploring it. And a really key move in this whole transformation was back in November 2022.
Ah, the Swedish match acquisition.
Exactly. A leader in oral nicotine, particularly with that ZYN brand. PMI calls this combo with IQOS their global smoke-free combination.
So it's not just about launching new gadgets or pouches. There's an internal revolution happening, too.
Absolutely has to be. They say it right in the filing. They need to transform the culture, get the right talent, become truly consumer-centric.
That sounds like a challenge in a company that size.
Massive. Changing mindsets across, 80-some thousand employees. And it's interesting, they also highlight being the first multinational company to receive a global equal salary certification back in 2019, and they've kept it.
Why mention that specifically?
Well, it signals commitment to internal equity, helps build their employer brand, maybe attract the different kinds of talent they need for this pivot, like tech or science people.
Okay, so we've got this bold vision, huge investment. Let's dig into the flagship products, IQOS and ZYN. First off, remind us, what exactly are SFPs?
Right, so smoke-free products. The filing defines them as products that provide nicotine without combusting tobacco.
No burning, that's the key.
That's the core idea. So think heat not burn, like IQOS, e-vapor products, or oral smokeless stuff like ZYN.
And the big claim is?
The big claim, supported by their science, is that these products generate far lower levels of harmful chemicals, which offers the potential to present less risk of harm versus continued smoking.
Potential less risk. Okay. That distinction is important.
Very. And this is where the regulators come in, especially the FDA in the U.S. It's been a rigorous process for IQOS.
Right. They got those exposure modification orders. What does that actually mean?
Think of it like this. The FDA looked at the science and agreed that switching completely to IQOS significantly reduces your exposure to harmful chemicals compared to smoking cigarettes.
Okay, reduces exposure. And the FDA's specific findings were pretty strong on that point.
Yeah, they were quite specific. They stated, quote, "The IQOS system heats tobacco but does not burn it,"
Right.
and that this significantly reduces the production of harmful and potentially harmful chemicals.
Okay.
And even scientific studies have shown that switching completely from conventional cigarettes to the IQOS system significantly reduces your body's exposure to harmful or potentially harmful chemicals.
Those are some powerful statements coming from the FDA.
They are, but, and this is really crucial context, the FDA did not issue a risk modification order at that time.
Ah, okay. Explain the difference.
Risk modification would mean the FDA explicitly says the product reduces health risks, like disease risk. That's a much, much higher bar, and IQOS didn't get that authorization, only exposure modification.
Got it. Exposure reduced, risk reduction not proven to the FDA standard yet.
Exactly. And these authorizations come with strings attached, strict marketing rules, reporting, lots of requirements, and they aren't guaranteed forever.
Especially if kids start using it or non-smokers.
Precisely. The FDA is watching for significant uptake in youth or non-smoker initiation. That could jeopardize the authorization.
Makes sense. And speaking of the U.S. market, big news for IQOS there recently.
Huge news. PMI bought back the full U.S. commercialization rights for IQOS from Altria. That deal closed April 30, 2024.
How much did that cost them?
A cool $2.8 billion in cash. Yeah. And this was possible partly because of a legal settlement back in February 2024. PMI settled with a BAT affiliate, Eco Ventures Trading.
Right, that whole import ban issue.
Exactly. That settlement got rid of the import and sales bans on IQOS in the U.S. effective March 11, 2024. So the path is now clear for PMI to really push IQOS in the states themselves. They're restructuring the whole supply chain for it.
And what about reauthorizing those exposure claims? Is that ongoing?
It is. PMI submitted the renewal applications back in July 2023. The FDA officially filed them for review in May 2024.
But the original order expired.
It did in July 2024. The FDA hadn't made a decision by then, but PMI believes because they filed on time, they're allowed to keep using the exposure modification claim while the review continues. So sort of in limbo, but still marketed that way for now.
Okay. Meanwhile, ZYN, the other big player, also had a major U.S. breakthrough.
A really significant one. January 16, 2025, the FDA authorized all 20 varieties of ZYN nicotine pouches.
All 20. That seems comprehensive.
It is, and the FDA's conclusion was pretty notable. They found ZYN has substantially lower amounts of harmful constituents than cigarettes and most smokeless tobacco products.
Lower harmful constituents.
Yes, and importantly, they concluded the authorized products pose lower risk of cancer and other serious health conditions than such products. That's a big statement for ZYN.
So ZYN got a stronger finding from the FDA than IQOS, in a way, regarding risk.
It seems that way based on the language used for ZYN's authorization regarding specific health conditions compared to cigarettes and traditional smokeless. It's nuanced, but definitely a win for ZYN.
Interesting. And what about outside the U.S.? Are other scientific bodies looking at these products?
Yeah, and that adds more perspective. The UK Committee on Toxicity way back in 2017 looked at heat-not-burn products generally. They said probably less harmful than cigarettes, but also more harmful than e-cigarettes.
Okay, so somewhere in the middle.
Kind of. Then you had the German Federal Institute for Risk Assessment in May 2018. They found big reductions, like 80–99% in some key harmful chemicals for IQSS, suggesting a discrete benefit.
And the Dutch?
The Dutch National Institute for Public Health, also May 2018, similar conclusion. Using IQOS is probably less harmful than continuing to smoke cigarettes.
So a pattern emerges, at least comparing to cigarettes.
Definitely. You saw similar confirmations of significantly lower harmful chemicals from bodies in the Eurasian Economic Commission and even the China National Tobacco Quality Supervision Center later on. Global scientific bodies are generally seeing lower toxicant levels compared to cigarettes.
And PMI isn't just relying on IQOS and ZYN, right? They're broadening the portfolio.
Yeah, they launched a product called Bon ND, another heated tobacco product, in the Philippines and Colombia in late 2022.
Okay.
And they renewed their deal with KT&G, the South Korean company, in early 2023. That lets PMI sell KT&G's smoke-free products outside South Korea. So they're building a wider range of options.
Okay, so we've got the vision, the products, but how does this play out globally? Let's talk about PMI's footprint. It's just massive.
It really is astonishing, operating in approximately 170 markets.
170?
Wow, and they have at least a 15% market share in about 100 of those. Think about the diversity. Japan, Ukraine, Argentina, Saudi Arabia, Germany, South Korea. It's everywhere.
How do they even manage distribution across so many different places?
It's super varied, tailored to each market. Sometimes it's direct sales to shops, sometimes independent distributors, sometimes big wholesalers.
Right.
Plus, they're building their own e-commerce and even physical brand stores for the smoke-free products. It's a complex web.
And managing the people side must be huge, too. How many employees are we talking?
As of the end of 2024, approximately 83,100 people worldwide.
83,000.
Yeah, representing over 130 nationalities.
Yeah.
The filing talks about fostering a performance-driven and collaborative culture and maintaining good relations with employees and unions.
Which has to be critical when you're trying to pivot the entire company.
Absolutely. Getting that many people with that much diversity aligned on a new vision is a major leadership challenge.
And what about sustainability? Is that part of the picture?
It seems integrated, yeah. They talk about managing land and water resources, having a diversified sourcing strategy for tobacco leaf to build resilience.
Resilience against what? Climate change?
Partly, yeah. They specifically mentioned doing an annual global water risk assessment and having a strategy to mitigate the risk that climate change could influence weather patterns. It sounds like practical risk management as much as anything else.
Okay, so huge scale, complex operations, but it can't all be smooth sailing. Let's get into the headwinds, the risks and challenges. This is where it gets really interesting, right?
Definitely. The regulatory landscape is probably the biggest one. It's described as rapidly evolving and generally getting stricter.
Like the WHO.
Yeah, the World Health Organization and its Framework Convention on Tobacco Control, the FCTC. They put out reports, policy recommendations.
Which aren't laws themselves, but...
But they heavily influence governments. And the filing notes that if these recommendations are implemented, they could restrict both the availability of these products and the access to accurate information about them.
Restricting information. That seems counterintuitive if the products might be less harmful.
Well, that's the tension, isn't it? Public health bodies are often very cautious, worried about uptake by non-smokers or youth, or just maintaining a strong anti-tobacco stance overall.
And we see actual restrictions already in place.
Oh, yeah. Lots of examples. Outright bans on selling SFPs in places like Argentina, India, Turkey.
So no IQOS or ZYN there at all.
Correct. Then you have packaging rules like plain packaging, bans on ingredients, especially flavors like menthol in the EU, Turkey, Brazil, Canada, even some U.S. states.
Flavors are a big battleground.
Huge. Also, bans on displaying products at retail, like in Australia, Canada, Russia, and just broad restrictions on advertising and marketing almost everywhere. It really limits how they can communicate about these new products.
And then there's the tax issue. That seems critical.
Absolutely critical. The risk is that regulators might just stop differentiating SFPs from traditional cigarettes when it comes to taxes.
Which would make them more expensive.
Exactly. It would hammer the SFP unit margins and make them less appealing price-wise compared to cigarettes, undermining the whole strategy.
Okay, regulations are tough. What about geopolitics? That must be a factor.
A major factor. The Russia-Ukraine war, for instance, has had a material adverse impact, according to the filing.
How specifically?
Well, in Ukraine, their main factory in Kharkiv is still suspended. They did complete a new facility in the Lviv region in early 2024 and started production there in April. But still, major disruption. Their assets in Ukraine were about $6.6 billion at the end of 2024.
And Russia. They were a big market, weren't they?
Huge. But PMI has suspended new investments there, scaled down operations. They're constantly evaluating what to do. Divesting, getting out completely is apparently really difficult due to very complex terms and conditions imposed by Russian regulations.
So they're kind of stuck.
Seems like it, to some extent.
Yeah.
And they explicitly mention a material impairment risk. Basically, they might have to write down the value of those Russian assets significantly.
How much are we talking?
Their total assets in Russia at the end of 2024 were about $2.7 billion. And interestingly, $1.0 billion that was cash, mostly held in rubles.
Rubles they might not be able to easily get out or convert.
Potentially. And beyond the direct impact, these conflicts mess up supply chains for things like filters, packaging materials.
Okay, so regulatory pressure, geopolitical instability. What about just basic economics? Inflation.
Yep, that's in there too. They talk about a sustained period of elevated inflation in 22, 23, and 24. Hit costs for materials, wages, energy, transport.
Is it easing up?
They expect a moderate inflationary increase in 2025, mostly driven by higher tobacco leaf costs. But the big risk is always reduced consumer spending power if inflation stays high.
And currency fluctuations.
Yeah.
With 170 markets, that must be a headache.
A massive headache. They're exposed to unfavorable currency exchange rates. The filing specifically mentions hits from the Egyptian pound, euro, Japanese yen, Russian ruble. It can directly reduce their reported revenue and profit when translated back into U.S. dollars.
Right.
Plus, in some countries like Argentina and Russia, they face capital controls or foreign currency exchange constraints. Basically, trouble moving money around freely.
It's a minefield. And then there's litigation, always a shadow over tobacco companies.
Still a very big one. The filing details this huge $2,316 million non-cash impairment charge they took in 2024.
$2.3 billion. On what?
On their equity investment in Rothmans, Benson & Hedges, their Canadian affiliate, RBH.
Why such a big write-down?
It's tied to this massive proposed settlement for Canadian tobacco lawsuits. We're talking CAD $32.5 billion, which is like $22.3 billion US dollars, to settle a whole bunch of claims.
That RBH is part of that.
They are, but interestingly, RBH is actually objecting to how the settlement money is being allocated among the companies involved. So it's still complex and ongoing, but that impairment charge shows the massive financial hit they're anticipating from these legacy issues.
Legacy issues. But what about new issues? Any lawsuits related to the new products?
Yes, and this is potentially significant. A new lawsuit was filed July 30, 2024 in Florida. It's an individual complaint about ZYN.
ZYN. What are the allegations?
Alleging nicotine addiction from the pouches that they marketed to minors and misrepresented the product.
First of its kind for ZYN in the U.S.
Seems like one of the early ones to watch. PMI says in the filing they can't predict the outcome or estimate the potential loss right now. But given ZYN's growth, you can bet people will be watching this closely.
Absolutely. Any other big challenges mentioned?
Briefly, yeah. Talent acquisition, competing for digital and life sciences people against companies with, let's say, greater societal acceptance.
Yeah, that makes sense. It might be harder to recruit top tech talent.
And cybersecurity. Always a risk for a huge multinational. They say they're significantly dependent on their IT systems, and the threats are constantly evolving in sophistication and volume. A major breach would be bad news.
Okay, that's a lot of challenges. Let's pivot quickly to the financials for 2024. How do they actually perform amidst all this?
Well, the bottom line shows the pressure. Net earnings attributable to PMI were $7.1 billion. That was actually down $756 million, or about 9.7% from the previous year.
Down almost 10%.
Ouch, yeah. And diluted earnings per share, EPS, was also down 10% to $4.52. They specifically note an unfavorable currency impact of $0.38 per share. So those currency swings we talked about really bit into the results.
Were there any bright spots financially?
There was one notable positive adjustment. A favorable fair value adjustment on some equity investments they have in India and Sri Lanka. That added about $418 million after tax. So that helped cushion the blow a bit.
But the really fascinating story in the numbers is the volume shift, right, between cigarettes and the new stuff.
Absolutely. This is where you really see the strategy playing out. Shipment volumes for heated tobacco units, HTUs like IQOS consumables, grew pretty strongly. They hit almost 140 billion units in 2024.
Up from what?
Up from about 125 billion in 2023, so solid growth there.
And nicotine pouches, ZYN.
That growth was explosive. They shipped 644 million cans in 2024.
644 million compared to
421 million in 2023, so a huge jump, really showing ZYN taking off.
And what about cigarettes? Are they just plummeting?
Interestingly, cigarette volume was actually slightly up in 2024 to about 617 billion units. But when you look at the growth rates, all the momentum is clearly with the smoke-free products. HDUs and pouches are soaring, while cigarettes are relatively flat in this snapshot against a longer-term backdrop of decline in many markets. The trend is undeniable.
Okay, and what about returning cash to shareholders?
Yeah.
Dividends, buybacks.
They're still paying a hefty dividend, $8.2 billion paid out in 2024, slightly up from $8.0 billion in 2023.
But share buybacks.
Those are still suspended. They paused the program when they bought Swedish Match, needing the cash for that deal. So right now, the priority for capital seems to be funding the transformation and paying dividends, not buying back stock.
Okay, so wrapping this all up, we've unpacked this incredible, almost paradoxical strategic shift. a tobacco giant, PMI, genuinely aiming for a smoke-free future.
Yeah, powered by innovations like IQOS and ZYN, billions invested. But as we've seen, they're grappling with just formidable challenges, regulatory, geopolitical, economic, legal. It's coming from all sides.
It really is a complex and dynamic picture. Shows how even the biggest, most established industries have to adapt or, well, face existential questions.
So the provocative thought maybe for you listening, what does this all mean? Think about the bigger picture here. An industry leader actively trying to disrupt its own core multi-billion-dollar business.
Yeah, what can we learn from that? About companies changing, about that tricky intersection of public health and profit.
And just the future of consumer goods in a world that's getting really complex around information, rules, ethics. It's this constant, intricate dance between innovation and responsibility.
Definitely something to think about. This deep dive really shows how established players have to evolve. Makes you wonder, what other companies out there are facing similar make-or-break moments? How might they adapt?
Good question. Something to mull over until our next deep dive.